Hi, David Duff from Ashton Accounting. In this video today we're going to talk about business means business. Quite often when we get a new client that comes to Ashton Accounting, they'll have a bank account. It could be a corporate account, it could be any kind of a business account, but they wind up paying a lot of personal expenses, Redbox, movie tickets, groceries, whatever it happens to be. If it's a corporation or it's a legitimate business and it's denoted as a business, you cannot write personal checks out of the business account. They have to be all business checks. Keep in the back of your mind, you need to have separation of personal and business. You need to have a personal checking account. You need to have a business checking account. You can transfer money from the business checking account back into the personal when you need to pay your car payment or house payment or taxes or whatever it happens to be, your property taxes. But you need to have a separate account and keep everything designated as either business or personal. You cannot mingle the funds. There's a very large tax case many years ago when the person mingled money and the IRS came in and they said, this is not a corporation, it's not a legitimate business. And they turned it back into a sole proprietorship and they wind up charging them an additional 15.3% self-employment tax, and it caused a giant panic for the last 4 years. This is not one of my cases, but this has happened. You need to keep business as strictly meaning business. Business cell phones, business rent, business expenses, credit cards, office expense, gasoline, travel expenses, whatever it happens to be. You need to have great details. Keep in the back of your mind that quite often, should a business ever be audited, it's not audited sometimes for up to 5 to 6 years. Statute of limitations says 7. So during that period of time, you need to have great records. We do encourage our clients to keep all their information in their corporation binder so that they have it and they can put this on the shelf, they can slide it away, put the next year next to it, the next year next to it, so forth, so that down the road, when this should ever come up and become an issue or possible audit, we have all the information documented, it's all stored away, and it's all ready to go. I don't like losing an audit ever. And I've not lost hardly any of them. But the problem can be when the client does not have good records. You need a balance sheet, profit and loss, ledger accounts, bank reconciliation. You need to prove everything. Remember, the IRS says you're guilty until you prove your innocence. It's great whenever clients give us the right information, but mingling funds can be very difficult and it can cause you to lose your business status. Keep in the back of your mind, we love helping clients save money in taxes because making money is great. Keeping more of what you make, that's even better. Thanks for watching this video.